I'm saying the dependent care tax credit is an absolute scam. Hey there taxpayers, welcome back to my channel where we're breaking down the intricate world of small business topics and tax strategies into bite-sized, digestible pieces. Today we're diving into the dependent care tax credit. So if you have kiddos and send them to daycare like me, so mom and dad can go to work, you're probably shelling out a boatload of money to that daycare facility, right? I know there's a lot of articles right now that are telling horror stories of individuals paying $2,000 or even $3,000 per month for daycare. That may be true in other parts of the country, but in my neck of the woods, we're seeing pretty modest rates of $250 on the low end to like $400 per week on the high end. So $1,000 to $1,600 per month, but no small amount by any means, right? With these huge expenses, you've probably heard about the dependent care tax credit and thinking to yourself, well, I'm paying such a large amount of money for daycare, there's probably a sizable tax break that you'll be entitled to at the end of the year, right? Well, let's get into some specifics and some of the fine print on the credit first. So who qualifies for the credit? First, a child, it's got to be under the age of 13, a spouse or a person that's unable to take care of themselves, and the child or person must be claimed on your return as a dependent. There are special rules for claiming expenses for individuals that are not your dependents, but it's best to consult your tax accountant or professional for more details on that. So what expenses qualify? So nursery schools, before and after care programs, day camps, dependent care for an older individual. So what doesn't qualify? Expenses to attend kindergarten or grades above that, child support payments, summer school, sleepaway camp. So if you're sending your child away to a camp that's overnight, that doesn't qualify. Be mindful of trying to list these expenses for household employees like a nanny or a household worker as well. These are not going to be recorded as dependent care fees and are typically subject to additional taxes. Finally, just to be clear, to be eligible for this credit, you have to have earned income, meaning you are gainfully employed or seeking employment. So couch potatoes, you'll have to look elsewhere for tax breaks. So now let's talk about the dollars and cents. In 2024, the dependent care tax credit can be a lifesaver for some, offering up to $3,000 for one qualifying dependent or $6,000 for two or more. So as a mini tax refresher, a credit is a dollar for dollar reduction for a refund against your tax return. Sounding pretty good so far, right? So $3,000 dependent care for one child, $6,000 for two kiddos, not bad. It could really help offset the cost of daycare. But let's look at the finer print of the credit. The credit is calculated first based on a maximum of 35% of the total expenses, meaning you'll have to spend a minimum of just over $8,500 per year to realize that full amount. Further, the credit gets reduced by 1% for every $2,000 of additional household income over $15,000. So to get the maximum credit of $3,000, you will need to make $15,000 or less and spend $8,500 per year on daycare expenses. That's right. If you make a minimum wage of $15 per hour in New York State and you make an annual salary of $31,200, your credit percentage is already decreased to 26% of that original 35. The further you go, the credit gets reduced down to 20% of the maximum $3,000 once your income exceeds $43,000 per year. That's it. To me, this is a head scratcher. So on one side, you can say, well, my household AGI is over $43,000 and at least I get a $600 tax credit per child. But on the other side of the coin, I'm saying to myself, who is sending their kid to daycare spending $8,500 per year while earning less than $15,000 of total income? The economics of this credit are not at all incentive-based. So typically, the entire reason the IRS puts out tax credits and deductions are so that they can incentivize the public to do something. The reason you get a deduction for saving money for retirement, the IRS wants to help themselves by not having so many people on welfare programs in this case. So you would think that the dependent care credit would have some, or at least a moderate incentive with wanting working parents to get back into the workforce. In doing my research for this video, I found that those AGI phase-out limitations were last updated in 2003. There has been zero increase for inflation in over 20 years. For this reason, I'm saying the dependent care tax credit is an absolute scam. But don't get me wrong, I am certainly not advocating for not collecting any credit that's available to you. So when those little daycare providers send you a little note, does anybody need a copy of their payment history? You better jump on that and take advantage of that scrap of tax credit that's available to you. Let me know in the comments what you think about the dependent care tax credit. Value or total scam? Until next time, stay savvy, stay sane, and may your tax refunds be ever bountiful.